Soyeon Park. Now I'm learning business administration. The title I'm going to present today is Event Study on IRA Reaction in the EV Market, Comparative Analysis of Korean and United States stock markets. The table of contents is as follows. The IRA is a bill designed to ease inflation and has a $740 billion financial resources, and also IRA includes the tax credit about the related electric vehicle and secondary battery. So Korea is very strong in the secondary battery and electric vehicles. So I frequently read some IRA related article which made me curious about the stock impact. Also, I was wondering about whether the stock return would be positively or negatively affected. This is because there were several mixed opinions from experts about that IRA might worsen the corporate performance, and the IRA can be positively impacted to corporate. But this is because they are building some factory in the North America. Then they can get a subsidy more easily than before. So I selected this research problem, and this is my motivation to do this research. To solve my curiosity, I learned some previous work, and then I found some study on impact of stock about the IRA, and then also there is such IRA related work, but they don't have quantitative research, and also they have limited understanding of the effect of IRAs on specific industry due to the failure to analyze the individual companies. And they only just do the analyze the big indices such as S&P 500 and S&P Global Clean Energy. So that's why I selected the specific markets such as electric vehicle, and I wanted to focus on that market to the event study. I selected the market model among the 7 models for the event study. The event study is the method to analyzing the stock return that will be appeared if not the event had occurred, and then compare it with the actual price. And also market model is like this. RIT is expected return, and alpha is unsystematic risk, and beta is the sensitivity of individual security, and RMT is market return rate, and the epsilon is the error term. So if we calculate the one formula again, then we can get second formula. Then as you can see, the epsilon is same as the abnormal return. So we can also calculate the cumulative abnormal return by adding all of the abnormal return during the specific period. And then I set an event study timeline. The estimation window is for expected return. I selected this window T-300 days to T-30 days. And also event window is for seeing some trend about the abnormal return and cumulative abnormal return. So I selected event window to T-3 to T-2. T-3 to T plus 3. And T0 is the event state. I developed the hypothesis, and I divide the hypothesis into three. The first one is there will be a significant stock price reaction in the Korean market in the short term before and after the initial Korean articles relate to IRA. In the short term before and after means the event window T-3 to T+3. And second one is all of the same, but it is regarding United States article. And third one is United States market and United States article. And then I selected some company by the market share. To do this, I divided the industry into 12 sectors, like automotive and nickel, like waste battery, and then I select some company. And also I needed to select the article. The article I selected is, which is mentioned the word Inflation Reduction Act or IRA. So the first article in United States is July 27, 2022, and then after 2 days, the Korean article came out. So by applying that model, I can get some results. So if you can see, the T-3 to T+3 CAR. It means we can see all of the cumulative abnormal return trend. So right before the event, the cumulative abnormal return is going down, but right after the coming out the article, the cumulative return is going up. This is the United States trend line, and this is the Korean cumulative abnormal return. This one is the regarding Korean article. This one is the regarding United States article. On the other hand, unlike the United States market, Korean stock return is kept going up. And also T-1 to T+1 CAR is very similar with the T-3 to T+3. And we can also see this T2 plus T+3 CAR. This means how much the article affected the stock return and company's return. This is all is going up after coming out that article. So from this we can guess the IRA bill can be affected positively to the company performance or company stock return. And then I tested hypothesis. The result means there was a significant impact by the IRA on the stock market. So we can see the 3 reject and 4 accept. So it is very actually it is not, we can't see any trend within the event window. This is because abnormal return is sometimes positive and sometimes negative, positive, negative, positive, negative. So I can't any trend by the hypothesis 1. And also hypothesis 2 is same. Abnormal return is very different every day, and hypothesis test is also have to accept and reject. But I found a meaningful result by the third hypothesis. This is the United States market and United States article. We can see there are lots of reject. It means there were significant impact on the stock market, and also before time t, we can see the negative abnormal return, and after time t, we can see the positive abnormal return. It means after coming out the article, the United States stock market related to electric vehicle affected by IRA article very positively. I will conclude by explaining contribution and limitation of this study. The contribution is we can see the short-term fluctuation in the stock market, and also it can provide stock market predictability. It is very important for Korean stock market. This is because Korean stock market affected by United States economical situation or circumstance. So we need to predict some trend by this study. And also I have some limitation. I failure to consider other factors like macroeconomic or profitability of company and something like that. I didn't put that factor on my event study. And also lack of number of samples and lack of diversification of articles was a problem. When I add some samples more and diversify my article, then I can get more accurate result than now. So I will put this limitation on my future study, and I will try it again. Thank you for listening to my presentation, and if you have any questions, feel free to let me know.
Thank you. Thank you very much. Any question?
Were the Korean publication dates lagged to take into account that there's, the U.S. publication dates lagged to take into account the time that
right.
could get to Korea?
Mm-hmm.
Do you understand what I'm saying? Because if you look at those two graphs,
Yeah.
they're just kind of,
This one and this
you could split that U.S. line,
US line.
the top.
Great job. How could you define those articles as an initial article?
The initial article.
How
This
could only
is
the releasing dates? Or
only releasing date.
only searching in Google?
I use some website that which is calculate and analyze the article, and I put the IRA or Inflation Reduction Act, and I found all of the article, and I select the first article.
On Factiva? On Factiva? This
No.
is what you use?
Yeah, this is a Korean website.
Ah, okay,
And also, I used Google News for the United States article.
And one question maybe, why would you expect the difference between the Korean article or the US article for the Korean market?
For the Korean market.
Yes, why
Why?
would you expect a different reaction?
Why it would be?
Like for Korean investors, I believe they follow US press as well and both Korean press, but
Yeah.
why would there be a different reaction with a Korean article or with
Between the article.
Yes. I don't know, maybe there is no reason, you just wanted to try and I was just curious if there was a reason.